Well, good morning, everybody. Good morning, Steve.
Good morning, Lisa.
How are you today?
Great.
I want to thank Catherine Clark for that introduction. It's so nice to be able to see people and your faces that aren't actually on a computer screen for the folks that are in the room. And it's still, and a lot of you are a lot taller than I had anticipated, actually. You really can't tell height when you're looking at a Zoom call. But of course, Steve, you and I have known each other for many, many years. And it's nice to have our conversation that we normally have quietly over lunch in front of, 1,000 people. So we'll see how this goes. It'll be interesting. We're going to cover, for the folks that are listening, we're going to cover both business, of course, and then we'll get into some world views. What I know about Steve Hudson is that not only is he a fantastic businessman, but as well has a keen interest in politics and I would say pretty smart about it too in terms of strategy. And as my time when I was Minister of Transport, I did tend to take some advice from you, and I appreciate that. And I just say that publicly, that you were very helpful when I was trying to navigate some difficult files in transport. And I really appreciated some advice as a stakeholder that you received. But nonetheless, let's start with business.
Sure.
Because I think folks will be interested in that. You recently sold one of your commercial finance businesses to a pretty big bank in the United States. There seems to be a lot of M&A going on right now. It's a really robust market. Just wondering, what do you think is driving financial services in the M&A market right now?
Yeah. And maybe before I do that, I've always tilted to the right in politics. Happy to have been a great supporter of yours, Lisa.
Thank you.
It's unprecedented. You take three drivers that I would observe, not just in our business but across North America. You have unprecedented liquidity. Mm-hmm. We printed $4.7 trillion in the U.S., another $3 trillion to come past this weekend.
Yeah.
So $7 trillion in total. The law of unintended consequences, $3.5 trillion ended up in U.S. banks because people didn't need the cash.
Yep.
So they put it on deposit, they paid down loans, and it created a real problem for U.S. banks because they tend to borrow at 1% and they lend at 4% to make their money. And when you've got lots of money on deposits and no one borrowing, it's a bit of a challenge. So we've lots and lots of cash in the system.
Yeah.
And then the second driver has been interest rates, all-time ultra lows.
Yeah.
And with inflation, Lisa, talk about that, really negative interest rates. And the third driver has been this unprecedented demand for debt investors to buy investment grade and non-investment grade debt. So you put those three together and you see unprecedented M&A, significant appreciation in asset values. We sold a little finance company for $2+ billion, which I'm happy to do for our shareholders, but I didn't see it coming.
Yeah.
12 months earlier, we thought we were going to own the business for the next 10 to 15 years.
Amazing.
And it's just not in the bank, it's across all sectors, Lisa.
And we're going to see, I guess, a really robust bounce back from this 2.5 years, I guess, of people being locked away for better or for worse. And you mentioned inflation, which is going to be of great concern. I saw a tweet the other day from my friend Mark McQueen. He said, the day of a dozen bagels for $6.50 is over. It's now $11. And if you tell me you think it's going to go back to $6.50, I'm telling you it's not going to go back to $6.50. It's the new reality. So what's inflation doing in the U.S. economy right now? Are they feeling it as we're going to be feeling it in Canada?
Yeah. Well, Jay Powell tried to tell us that inflation was transitory. Mm-hmm. My personal view is it's not. I think it's here to stay. There's just too many dollars chasing too few assets not to have significant asset appreciation over the next decade.
Yeah.
And I think it's going to stay. What do you think?
I am going to plead the fifth and say that you're the financial whiz. and I worry about it from a public policy point of view. I do worry that inflation is here to stay because as a politician during elections, you go door knocking. And you've done door knocking, I'm sure, in the past for some politicians. And you hear it on the doorstep, what's going on. And nothing terrifies people more than big increases in their fuel, big increases in their electricity, and big increases at the grocery store. And you're going to hear it. and there's going to have to be some kind of action. When you have action, you get unintended consequences. So inflation really quickly worries me because people aren't prepared for it. They're just like they weren't prepared for COVID. They're not ready for this to happen, I don't think.
Well, yeah, I'm probably one of the oldest people in the room or online for this morning. But I remember back in the 70s and 80s when we printed all this money to finance the Vietnam War, and the unintended consequences you're referring to is, housewives standing in lines with bread prices tripling and quadrupling, and that brought a U.S. administration down, and there was wage and price controls in the U.S.
And in Canada.
And in Canada. So it's, a little micro piece, going to cause some piece, is that we're one of the largest providers of affordable homes in the U.S., and prices are up 16% in the last 12 months. And you can't get a home. We're sold through 22 into 23. So all that has to, it's going to have an effect elsewhere. So
you have an interesting business, though, and when it comes to affordable housing, because you're doing something that I don't think that we do much of in Canada, and that has to do with modularity?
Correct. Yeah, we build homes inside of plants.
Yeah.
Like you buy anything else, like a car in a plant, we actually build homes in a plant. This year we build and finance. This year, probably 20,000 homes. We're quite, on an ESG point, we're quite proud. On Friday, we got a Sustainalytics, which is the audit firm that audits ESG. We got a favorable report on compliance that there's a thing in the U.S. called CRA, which is U.S. federal government, to make sure there's access to financing for modest income. Yeah. So we got that opinion, which was great.
That's really good.
And I think to your point, Lisa, I think we're in discussions with the province of Ontario and other players about how we can launch manufactured homes in scale in Canada. A manufactured home costs $55 a square foot to build, and a site-built home is $144. And homes are now priced out of affordability for most families. Yeah. So it's a great business to be in. We're kind of sold out.
So are you in the business, though, of placing it on the site? Do you have to deal with all the regulatory approvals and all that red tape that happens up here?
In here, it's not in my backyard. Because people, when you talk manufactured homes, they think of Dorothy and the windstorm and it gets blown away, and that's the view of mobile homes. Sure. Mobile homes haven't been permitted to be manufactured since 1974, but they're still out there. Yeah. What we manufacture and finance are homes that have a 40-year life, have HUD approval in the U.S., and you'd be hard-pressed in a lot of communities to say, that's a manufactured home and that's a site-built home. Yeah. I could live in it. They're quite attractive. Yeah. But in the U.S., 10%, 1 in 10 people live in a manufactured home. In Canada, it's less than 1 in 20. And the issue is zoning. Mm-hmm. We need leadership on zoning at the provincial level, I believe, because it's hard for the various mayors to get the zoning. Yeah. I mean, if you're a couple right now in your late 20s, you have to save $200,000 after tax income in order to even hope of getting a down payment together for a home in the GTA. I just can't imagine, walking out with student loans. There's got to be more than just increasing the supply. There's got to be something else that can be done. Yeah. Well, I think that its time has come. And if we get leadership at the provincial level, whether it's Ontario, Quebec, or out west, and take provincial land and zone them for manufactured home communities, then I think you'll see a breakthrough. Out of curiosity, is there a specific region of the States where these homes are predominant? Is it something where it's part of the culture, therefore, that they have no problem with it? Yeah, Texas, California, Florida, where I live, that's 1 in 5 are manufactured homes. But you're now seeing in Northeast, we launched a new project last week called Owl's Nest in New Hampshire, which is manufactured home besides site-built home. Yeah. So it's coming, but it's in the Northeast in the U.S. It's a zoning issue, same as what we faced in Canada. Yeah. So you have to really smash that barrier down, and then you'll get traction. Yeah. So you spent the pandemic, I guess, in Florida. Yeah. Well, mostly in Florida up here.
I don't think we really had a lot of choice. I mean, you were kind of stuck on whatever side of the border. Although we were talking earlier, today's the first day when Canadians are allowed to take their vehicles across the border, and I guess the lineup started at 2:45 a.m.
Wow.
just to get across and the QEW heading to the Niagara Passageway was quite busy this morning, and people were desperately trying to get to the border so they could get across. But families got separated. We often talk about the impact that the pandemic had on the economy. Any opportunities coming out of the pandemic that we should be mindful of? Because the world has changed.
Yeah. Well, I have the benefit of living both in Florida and Ontario, and it's two ends of the spectrum.
Yeah.
But there are, I think back March 13th, 2020, it's kind of acknowledged the day when the capital markets, the financial markets froze. And I think we benefited from the 2008, 2009 Great Credit Crisis. Mm-hmm. Policymakers went through that, central banks, and the response was so quick and so deep that I think it could have been quite horrific. Mm-hmm. So the consumers got cash in Canada and the U.S. and were able to get their way. Mid-sized, small businesses, which took the brunt, where I think that's the opportunity, got some cash. But I think the recovery in small business will outpace that in large and mid-sized business. I think the opportunity is to invest in small business.
Okay.
And stop printing money.
Well, I got that memo. I understand that. I don't have any say in that stuff anymore, but they're listening, if we're listening. So inflation, definitely one of the impacts coming out of how we dealt with the COVID pandemic. Supply chain, though, there's a big shocker. It broke down pretty fundamentally when we first started with COVID because goods could not get out of China and we couldn't bring them into ports. And now we're seeing a further breakage. And do you think it's the supply chains reorienting themselves, or is this the new way of business?
I think we're in this disruption of supply chain for at least a year or two. Just think about this. We had to create 2 billion glass vials to hold vaccines. Mm. Where did that glass came from? It came from redirecting glass from home improvement, those windows you want. It came from other applications of glass. And that's a small example of what's occurred, the chip issue for cars. I think it's going to be here. In our case, I'd love to sell you a manufactured home this morning, but I can't sell it till 23. And that's really driven by the fact that people haven't gone back to work. Yeah. In the U.S., it's hard to find people who go into a plant, electricians and carpenters, to manufacture homes because they were paid to stay home. And they were actually paid more to stay home than they are in the plant. But that's coming to an end. A lot of the state unemployment programs have now ended. Right. People are coming back. But the recovery, my view, will take much longer. This supply constraint, which will accentuate the inflationary pressure, is here to stay for a while. There were recent elections in the United States, and the Democrats lost in Maryland, which was, okay, I have to cheerlead. But do you think that is that a sign of what's to come, or is it a one-off? $7 trillion of debt got printed. More than World War I, World War II, and the Vietnam War put together. Who's going to pay for it? Not who's going to pay for it. We're going to pay for it in taxes. Our children are going to pay for it. Our great-grandchildren are going to pay for it. And I think that people are now revolting. I think when people see interest rates, the market has now said there'll be 6 increase in interest rates in the next 24 months. 3 in 22 and 3 in 23. Interest rates are going to be up 150 to 200 basis points. Yeah. That's going to matter to the average Canadian and American who has a variable rate mortgage. Exactly. Because that's going to start to hit payments. Yeah. And I think when that happens, and we'll be into the midterms in the U.S., I think it will have an impact. And it will have an impact on Canada because the financial system is so tightly aligned. I'll tell you the one observation I have, and I'm not saying this because you're a vice chairman at CIBC, is the strength of the Canadian banks is unprecedented in the world stage. Like the capital that we committed, the regulatory oversight has put the Canadian banks. We spend several $billion in the U.S. It's all funded by Canadian capital. And I think that advantage that Canadians enjoy through their banking system is one of our natural advantages. Yeah, you mentioned about one of the 3 things that happened in the pandemic was liquidity, leading to mergers and acquisitions. So with all those deposits
and Americans sitting on them. Do you foresee them? How is it going to trickle out? Is it going to be all in one, or is it going to be something that lasts?
Well, we have a business that manages credit card portfolios for banks.
Right.
And U.S. credit card debt is about $1 trillion. It's always been there about $1 trillion, growing at about 4 or 5%. In the pandemic, for the first time ever, it went from $1 trillion down to $800 billion, a 24% decline, which was the fact that people weren't spending. The last 2 quarters, we've seen it come back, so people are starting to spend on their credit cards. They're transacting. Balances haven't quite recovered, but there's a lot more flow that probably would make sense in terms of people wanting to get out and take that vacation or go to that restaurant or experience life, but it's coming back.
And I guess you're kind of in the business of home renovation as well.
Yeah.
A lot of that stuff tried to happen during the pandemic, if you could get workers.
Yeah, no, it actually, a lot of the home contractors in the U.S. found a way to sell around us. So they would go into the backyard and sell the new windows. And I think the fact that people stayed at home so much, we're the largest financier of air conditioners in the U.S. Air conditioners weren't meant to run 24/7. So they ran and they broke and we replaced them. But it's been an interesting time.
Yeah.
I hope never to go through it again.
Oh, indeed. Hopefully we've learned from this and have some good public policy in place. So we're in Toronto today, and it's going to be 17 degrees Celsius this afternoon, which would make you think about, climate warming, the warming of the climate and stuff. But definitely ESG, you mentioned it already, is something that is on top of mind, I think, for most boards. Is it something that your board thinks about?
Yeah, a lot. We have half our company is held by large institutional investors. I won't mention which one, but a very large institutional investor in the U.S. said if we didn't have a formal ESG policy and it wasn't audited, that they could no longer hold our stock. And we were ahead of that already, but that was the biggest statement. When you have a big asset manager in Boston who says that they've got a directive that you have to have a commitment to ESG, it matters. Yeah. And requires the board to have an approved mandate, requires an ESG committee, and hence the work that we've done with respect to Sustainalytics and others. Yeah. And I think it's time, I'm part of the 30% club in Canada, which is 30% of board members being women and 30% of management. And I think that's a low mark. We have to do better.
I agree. I think that's great. I appreciate that. But you have a very diversified group of businesses, and I think some of your businesses, at least way back when you and I first knew each other, you may have some tank cars in that mix. So is it something where you have to diversify out? Is this a concern, or can it all be part of the mix these days? Well,
I would say, Minister, with your old hat on,
I know.
They are compliant tank cars.
They are. They're very good.
So we do have a fleet of tank cars. We haul a lot of heating oil up and down the Mississippi during winter, so they're important to the fabric. They're part of our business. You can debate pipeline versus rail car. I think the debate on pipeline is over for the short term. I think the changes you made, Minister, with respect to, you led North America in changing the safety of the rail fleet, which was great. It was long overdue. And I think that's why you haven't seen a reoccurrence of some of the environmental disasters we had in the rail industry. Your leadership.
Well, I appreciate that.
No, Lisa, you led the U.S. They reluctantly were drawn on by you.
Well, Lac-Mégantic was a disaster, and it was horrific. A tragic thing to happen to anyone's community. So I'm glad that Canada and I had the support of cabinet to do that. So what's up next for Steve Hudson? What are you up to, Steve? Let us know in the last minute that we have.
I think that there's back to the point of what are the opportunities coming with the pandemic. The pandemic was horrific. A million of people were affected. It's been quite sad. The opportunity coming out is with respect to small business and the consumer. And we're about to get a very large paycheck here in December. I'm the kind of guy that likes to redeploy that capital. Yeah. So we're looking for opportunities in the consumer finance sector, both in the U.S. and Canada. Yeah. We've got a small footprint in Canada. I think it's safe to say I'm a proud Canadian citizen. That we will be increasing our footprint in Canada in 22.
Great.
So I think we'll take that American money from Truist and redeploy it in Canada.
I think that's a great idea. Last question. Any advice to any young commerce students out there? I always ask because invariably there's people in the audience who have sons or daughters like mine in commerce or in education. Any advice to them as they make their way in the world?
It's okay to fail. I've had a career where it's not been like this. It's been a series of valleys and peaks. And I think you really learn from, it's tough. You're sitting, you have a son who's in commerce. It's tough to have that first failure, but I think you come out of it stronger and more focused, and the learnings are an important part of your career and your life.
Well, no question that you are definitely on top now, Steve Hudson. Thank you very much for joining us all today. Thank you very much, Steve Hudson, for your warm words. And that concludes our segment for this morning.
Thank you, Lisa.
Thanks, everybody.